Negative interest rates, does that mean that I get paid to borrow money? Well, watch this video to find out exactly what negative interest rates mean for your money. And P.S. This is a jargon-free, plain English video. What does a negative interest rate practically mean for us? Interest rates are the price to borrow money. So for example, if you borrowed £100 at 1% interest for the year, you would end up paying back £1. So if interest rates go negative, does that mean that I will be paid that £1? Yes, crazily, that is exactly what it means. A negative interest rate of -1% means you should be paid £1 for your borrowing. However, in practice, it doesn't work exactly like that. Commercial banks depositing their excess money at the Bank of England where there are negative rates may end up having to pay the Bank of England for the benefit of storing their money there. And the whole objective is this: it could incentivize these commercial banks to rather not deposit their money with the Bank of England, but to lend it to you and I and make a better interest rate. However, there is extreme competition amongst these commercial banks to lend their money to us. And so they also end up having to decrease the rates they charge us to borrow. That means our mortgage rates could drop, our overdraft rates could drop, and any other rate that we are charged for borrowing. In some countries where interest rates have gone negative and the mortgage rates are below zero, this means that when they borrow money to buy a house, they literally end up paying back less than they borrowed. Unfortunately, this doesn't mean that they get paid a monthly amount. They still have to pay a monthly mortgage amount, being the principal on their mortgage, but this monthly mortgage principal amount is reduced by the negative interest. How surreal is that? And doesn't that just sound like an amazing situation to find yourself in? Well, actually, no, it isn't ideal because firstly, in those countries that have ended up going to a negative interest rate, the cost of properties have skyrocketed, and now the normal person cannot afford a property. And secondly, negative mortgage rates means negative rates on our savings. And unless we want to keep our money under the mattress, we will end up paying the bank for the benefit of keeping our savings safe for us. How does the economy benefit from negative interest rates if nobody's earning anything on their money? As mentioned previously, central banks like the Bank of England reduce the interest rates to get you and I to spend. And when we spend, we increase the demand for goods and services in the economy. And as a result, companies are incentivized to produce more. And to meet this increased demand, they have to buy more resources and employ more people to produce. As the UK now has low interest rates, foreign savers have less interest in holding pounds because they don't get a good return on their saving. And as a result, they sell the pound and the pound depreciates. UK goods and services start looking relatively cheap to other parts of the world who will now start buying in the UK, further stimulating the economy. What can go wrong? Commercial banks have a huge amount of costs that they need covered in the interest rate that they charge to companies when they borrow and to you and I when we borrow. And if interest rates are kept low, it may become suboptimal for them to lend to us at those levels, counteracting what the central banks are trying to get them to do, lend to us. In addition, you and I may decide now isn't the time to spend money, even if interest rates are low, and we may choose to rather hold on to our money. Prices would need to drop significantly to entice us to spend, and it may become unprofitable for companies to sell at the reduced prices, and that will lead them to cut production and potentially downsize, and the whole economy could lead into a disinflationary spiral, an ultimate stagnation. Negative interest rates sound great until you look beneath the hood and get to see the negative implications they may have. And here's to moderation in everything, even those things that can save us money. What can you do? Keep building your financial flexibility. Fund your emergency fund to a level that you will feel comfortable in if there's extended periods of interruption to your earnings. Budget for your spending and keep to your plan, and continue to invest regularly and build your nest egg. Grab the Financial Intelligence Roadmap and see what else you can do to build your financial resilience. If you like this video, please let me know by liking it, share it with any other ladies who are ready to change their financial story, and comment below if you found anything helpful. For financial education and money talk designed for women, subscribe to my channel and hit the bell to be notified when I post a new video. It's been lovely chatting to you again, and hope to speak soon.